Bud Light is offering its beer for free in many situations for the 4th of July. And that's very interesting because now that we're in the summer drinking season and we're months away from the initial boycott call, or at least calls for boycott, you would think that this would have fizzled out, but it's not fizzling out. It's remaining. And in fact, it's getting worse in many situations. So, this goes back to something that I was saying when this originally happened, which is I do believe that at least in this situation, I don't think it's going to go away. But the bigger issue is that I think, and this is the focus of this video, I really think that this really changes things in the corporate context. And so that's what I want to talk about in this video. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel, and let's drive right into the main piece of news, and then I'll get into why this matters. So you can see Bud Light is making its beer nearly free for the 4th of July promo. And, this is amidst the boycott and sinking sales. Now, I don't think this is so much of a boycott anymore, as much as it is just, people saw something they didn't like and they just switched brands. And so they're not coming back. I don't think there's anything that Bud Light can do at this point to bring them back. However, some of them are just switching to other Anheuser-Busch brands, which creates an interesting opportunity in terms of an investor, because if you're just having your consumers switch brands, but it's still owned by the same parent company, is there opportunity in the security itself? So I'm going to investigate that in this video as well. And so, the story is that Bud Light is offering deep rebates on products for the 4th of July, making them almost free in some cases as a brand tries to prop up sales after a boycott knocked it off its perch as America's best-selling beer. And that's correct. Bud Light is not America's best-selling beer anymore, which I found very interesting. And, it speaks to like how quickly you can kill a brand in the eyes of consumers. And it's almost next to impossible to bring it back to what it used to be. This sort of gives me thoughts of like the whole New Coke situation. And there was a comment afterwards when it was all resolved and, Coke's brand was okay. Somebody was asked if they had done it on purpose. And I think the response was, I'm not that smart, nor am I that stupid. And I think that's the right response, because you never, ever, ever try and purposely kill your brand. It's almost next to impossible to bring it back. And so I just think that there's a permanent impairment in the brand. And I just don't think it's coming back, especially in light of how they've been trying to resurrect the brand subsequent to this. I just think that they're missing the mark. And this is something we were watching back in April and May. So the way that I would have played this, I didn't invest in this at all, but the way that I would have played this is I would have done sort of like a long call strategy where I would have shorted Anheuser-Busch and I would have gone long on Molson. But obviously, I'm not smart enough to make these plays as they're happening in real time. But one thing that I did notice is that as this thing started, I watched a lot of YouTube, and so I was sort of hearing about this as it was started. And one thing that I thought of was, what are some other viable competitors that you can switch to? Really, there are none, because if you dig into the other viable competitors, they all kind of do the same thing that Bud Light was doing with their marketing efforts. So there's no pure play here in terms of like major brewers. However, notice that when this happened, I think a lot of fund managers had the same idea I had, where they shorted Anheuser and they went long on a competitor. And so you can see the long short strategy really worked, and the opportunity was available for at least a month thereafter, where it just kept going. And I still believe actually that the opportunity is available. I still think Anheuser-Busch has a way to go in terms of share price declining, but this is once again just not an opportunity that I'm going to enter into. I like things that are a little bit more predictable. If there's one thing that I can forecast, I do believe that Anheuser-Busch's sales are permanently impaired. I don't think a lot of analysts or most analysts are factoring that in. But, it could mean that the share price could decline a little bit further. But, this is just an interesting trade. I think a lot of smart people did make this trade, and they made quite a bit of money off of this. And as you can see here, And Molson Coors was actually the top performing stock in the S&P 500 in April, which is something that we found very interesting on our monthly calls. So you have your competitors' share prices surging, you have your share price declining. What do you do as a corporation? Well, it looks like the marketing executives that are responsible for the boycott are no longer employed within the company. Now, this is speculation. I'll take you to the source. So this came from Daily Caller, and it was a source inside Anheuser-Busch that confirmed in text that Group Vice President of Marketing Daniel Blake and Bud Light's Marketing Vice President Alyssa Hernescheid are gone. And they go on to say that the wholesalers who Anheuser-Busch has distribution agreements with would have had an absolute heyday with leadership if they didn't remove her. The source said wholesalers were told that they were both gone for good by leadership during in-person conversations. They already shifted all of their direct reports to new people and head of marketing, the source said in another text message obtained by the caller. However, Anheuser-Busch is refuting these claims. So you can see here, this came out afterwards where Anheuser-Busch says that they denied claims that they fired the two top marketing executives responsible for the whole issue. And this really speaks to the tight rope that they're walking at the moment because they're trying to appease both sides. I ultimately think you have to pick a side, which is why this is disastrous for a brand. You know, Michael Jordan said it best, Republicans buy sneakers too. And that takes us to the wider conversation. And this is something that I was talking about with the Patreons on our calls and such. And it was that, you know, I really believe that this changes things. I really think that corporations getting very aggressive on the diversity, equity, and inclusion messaging or the sustainability messaging, I think they pull back, and you're already starting to see that. So in the Q1 conference calls, you can see that mentions of social impact initiatives during the conference calls have declined considerably from Q1 of 2022. We're back down to 2021 levels, but I think this continues to go down because I think more and more corporations see that, look, you're going to cause a divide in your consumer base, and it's not necessarily what you're trying to do. Also, by causing a divide in your consumer base, are you really speaking to the principles of diversity, equity, inclusion? The whole point of it is to bring everyone together. Why would you focus on messaging that is ultimately divisive? There are parts of DEI that does divide people, and so I think you need to stay away from that if you're a corporation that's looking to appeal to the widest audience possible. And so you're seeing that this has changed commerce as a whole. How long does that stay? Who knows? But let's look at Budweiser's share price and its valuation. So you can actually see that it's trading at 18 times earnings next year, and it's trading at 15 times consensus earnings for the year thereafter. So, you know, that 15, even that 18 times earnings looks very cheap. And so I wanted to investigate this a little bit further to see if that is actually cheap. Now, the first thing that I would think about is, what is this E? Like, does it make sense that the earnings will be sustainable? And so what I wanted to do is I wanted to look at their geographic diversification for the revenues to see just how much of the overall top and bottom line is being impacted by the boycott. And so you can see here, I'm not sure how material the decline will be in Bud Light volume over the long term, because, and it's not just the Bud Light volume, but it's, you know, people switching away from Bud Light and going to another brand, and how often is it just another Anheuser-Busch brand? But notice that, you know, North America is a very important market, not in terms of volume, but in terms of pricing, because notice that it's only 17% of their global volumes, but it's 30% of their revenues and EBITDA, whereas, you know, other markets actually sell more volume, but especially South America and the Middle Americas, but their pricing is different. So actually Mexico, does pretty well. I guess the Middle Americas does pretty well. South America is okay as well. But essentially what I'm trying to say is this is such a globally diversified business that, you know, the overall impact from the boycott, I think, is limited. But then the question really is, how much of an impact is it? I would suspect that the analysts are not taking that into account yet fully. I think, and part of that is just because it's hard to take into account. So when you go back to here, you know, is this are they really going to earn $3 per share this year? Is it going to be lower? Is this 369 even sustainable? I'm not sure, but there's a bigger issue here that I want to show you guys. When you dive into their financials, notice that, you know, you got this 76 or $77 billion of debt. I mean, I guess $77.5 billion of debt, less around $10 billion of cash. So you have approximately $33.5 per share of net debt. Which reflects around 8 to 10 years of earnings per share. So you have to take that into account when it comes to the valuation. So, you know, at first glance, the valuation looks cheap, but then when you take into account the debt, it actually is not a cheap stock by any imagination. And so this is what I mean. I mean, the stock is trading in the $50 per share area, mid 50s. It has around $33 per share of debt. And so that's what I mean about, like, it doesn't necessarily scream cheap at the moment. I mean, if the stock price got cut in half even further from this, now you're looking at really bargain type prices, but I don't think you're there yet. I don't think the share price goes there either. I don't think that the impact from the boycotts will be that heavy. But once again, this is something that I'm probably staying away from, but it is fascinating from the perspective of how much it's changed, just the mentioning of DEI initiatives on conference calls. So I'm going to continue to pay attention and see what's going on here. Let me know what you guys think in the comments below. Now, also, very interesting video that I put out recently. If you haven't taken a look at it, take a look at it right here.